All right, what's up everybody? This is Tanner from mytradingschool.com and the School of Trading. And what we have for you here today is another simple day trading strategy video to utilize. If you haven't seen our first day trading strategy video, the opening range breakout, go ahead and go up to the upper right of this video and it'll pop out and you can click it and go watch that one first before you watch this one. They're both very similar, however, and build off a lot of the same concept. So we're going to quickly run through this. We'll go over some chart examples. It's a really basic beginner level day trading strategy to utilize that puts things really as simple as possible for you so you don't get confused when you're making a lot of your day trades and you're beginning to day trade. So again, it's a simple day trading strategy. It's the PRB. And what PRB stands for is previous range breakout. The previous range is defined by the high price and the low price of the previous day's trading range. Okay, so you have the high price and the low price of yesterday's trading range, or if it was a weekend, obviously Friday's trading range. In an ideal situation, we would look for a bias towards either the high price or the low price of the previous range. A bias one way or the other will make a more powerful breakout possible. Now, is it 100% necessary that there's a bias one way or the other? Not necessarily, but what it can do is it makes the breakout more likely. If you see a situation where the price moves all the way to the bottom of the day's previous range and then sees a quick spike all the way up and breaks the top of the range, a lot of times in situations like that, a good amount of the momentum will have already started to diminish by the point it breaks that previous range. So when we get into the chart examples, we'll go over that a little bit on why it can be a little more significant to have a bias one way or the other. The very simple buy rules, a buy long or a call if you're an option trader, will take place when the price breaks above the previous range high price. Okay, so when the price breaks above the previous range high price, you would go long. A short or put for those who trade options will take place when the price breaks below the previous range low point. So if we break below the low point of the previous range, we're going to be going short on that specific stock. The risk to reward ratio utilized. With this strategy, we will utilize a 1-to-2 risk to reward ratio. It's all about cutting losses early when day trading and letting our winners run. When you day trade, you're entering a high amount of trades. You need to make sure that you cut your losses short, let your winners run. Using a 1-to-2 ratio means we could technically fail 2 times as much as we win, yet still break even. And a 1-to-2 ratio is a lot of what I personally use when I swing trade as well. But with day trading, it is going to be a little more tight. There may be some scenarios where we ended up getting stopped out and it may see a run, but we need to make sure we have the protective stop set in place to not let a trade turn against us to a significant point where it really damages our trading account. So though we are going to be looking for quick wins, it's not significant wins like you'd see in swing trading, 15-20%. With day trading, you want to add up good 5, 6, 7% wins continuously throughout the day to build your account. So the wins may be smaller, but we still need to make sure that we are protecting ourselves on the back end in case the price does move against us. So by utilizing that 1-to-2 ratio, it puts more in our favor to be profitable long term. So for example, if we utilize a basic 20-cent profit target, we would utilize a 10-cent stop. Okay, the profit target is double the stop. If we use a 50-cent profit target, we'd utilize a 25-cent stop. Now obviously I want you to learn to become dynamic with regards to the chart, resistance levels, support levels, and you need to, as you go through, even on the 5-minute chart, be aware of where key resistance levels are before you enter a specific trade, because you can utilize those resistance levels as profit targets for that specific stock, and support levels when it comes to shorting. So the basic chart setup, we're using a 5-minute, 1-day chart, and we're using candlesticks. So let's go ahead and jump right into it. I have E-Trade pulled up here. We have a basic Apple chart, 5-minute, 1-day, set to the candlestick setting. And what we're looking for, first and foremost, everything to the right of this middle line here obviously was today's trading range. We're focusing on yesterday's trading range. So Monday, today's Tuesday, October 20th. We're focusing on Monday, October 19th. And it's very simple. What we would do, we would take our guidelines and we would place one at the high of the previous day's range. It's right about there. See the high set over here. And at the low price of the previous day's range. So you've set your guideline at the high and the low price. So we've now defined the previous day's range. Now what you would do as this trading day starts, okay, you see the price settles down, has 2 red candles in a row, and then what does it start to do? It starts to show a bias towards the high point. And what we see occur right here is the price goes up and breaks above that previous day's range. So that would have sparked an entry right around 1180 roughly on this stock. And sure enough, what we saw after that was a significant continued push higher. All the way from 1180, we ended up running all the way up to 1113. So depending on what your profit target was, you would have seen success in this trade. If you utilized a 50-cent profit target, you know, or even a 20, let's say you went real small, you're going in with a large amount, you utilize a 20-cent profit target, you get the move from 1180 to $12, you're out real quick. Now it did see a continued push higher, but you executed your plan and you saw success for your trade. A lot of you who do weekly options, seeing a 20, 30, 40-cent move can be a fairly significant move for out of the money weekly options or whatever it may be that you trade. So again, this would have been a very successful scenario for this specific strategy setup had you traded it today. And we had talked about in the beginning our other video, our opening range breakout, where we utilized the first 30 minutes. Had you utilized that strategy, we would have had 5, 10, 15, 20, 25, 30. We would have placed our line right up about here, and we wouldn't have entered this one all the way until the 1230, 1240 range. So by utilizing the previous range breakout, it got us in the stock earlier, and we had the option to capture more of that price movement. So that is one example on Apple. We're going to go through a lot of examples here. I know it's very, very simple. Again, this is for beginner day traders, another strategy to have kind of in your tool chest for when you're trading. Very simple to where you don't get confused. You know how to execute the strategy. So again, we're going to go ahead and set. We've set I've already set it for us. We have the guideline set at the high of the previous day right over here. And we have the guideline set at the low price of the previous day. Now what we're looking for is a bias one way or the other. And sure enough, we saw the price open higher for that day. It opened above the guideline, went up, and then it kind of hung right around that point. It wasn't able to break below it, hung right around there. Sure enough, what did we see occur right here on this big red candle? We went down, we got the break right around 98.55, ended up falling in that candle alone all the way down to 98.28. Saw a minor rally, continued to push down. So if you had stayed in this stock, maybe utilized the trailing stop, continued to push down and ended up bottoming out here right around 97, saw a small rally, and then continued to fall. So if you were an individual who trades with trailing stops, you could have realistically been kept in this trade for quite a while. But again, with day trading, we're looking for those quick moves. If you had looked for a quick 20, 30 cents, you could have easily gotten that on this fall here from that initial breakdown of the previous day's high. We ended up seeing this one even go down and break the previous day's low. It didn't see as strong as a move, but it saw a move from 96.90 all the way to a low of 96.57. So depending on how big of a profit target you utilize, that could have been a win. It also could have turned into a loss had it reversed, and say you used a 70-cent or a $1 profit target, it could have turned into a loss as it reversed and went up and stopped you out. But that's the reality of day trading. You're gonna have the losses with the wins. Okay, that's why we utilize that 1-to-2 ratio, because we could realistically lose twice as much as we win, yet still break even. Now, obviously, we don't want to lose twice as much as we win, but when we do that, we put more things in our favor. So again, Facebook, we had the initial breakdown of the previous range, and it provided for that profit to be reached as it broke down below the high of the previous range. Let's do Google. We go to Google. Let's go ahead, let's remove some of these. So we have the previous range over here on the left. We've set the guideline at the high of the previous range. We've set the guideline at the low of the previous range. We notice the price immediately opens, and what does it do? It clearly has a downward bias, falls right down, breaks below the second 5-minute candle of the day, breaks below, provides an entry around 659.56, falls down 658.23, ends up seeing a slight rally, and continues to fall further, continues to fall down. So if you would have gotten this one around 659.37, you could have initially got a decent amount of profit as it fell to 658.29, continued to rally, saw a small rally, and then ended up collapsing even further setting a low of 652.09. So a really good opportunity with Google today as well to take advantage of that breakdown with the collapse. And we ended up seeing this price really trend all the way down throughout the day before finally bottoming out down here and starting to uptrend. So Google was another good example of the opportunity to see a good move on this chart. And remember, you don't have to utilize specific cent profit targets. You could always utilize percentages as well. You could set your percentage. I want a 4% profit target. I'll utilize a 2% stop. 5% profit target, 2.5% stop, and so on and so forth to make it a little easier. That's just for those of you who are incredibly new, just kind of starting to get you thinking about ways to set those stop losses. It is vital that you always have a stop loss set. Obviously, those of you who have been trading a little longer, you're a little more well versed on support and resistance, and I trust you to be able to make those decisions on the stop losses that you utilize. Let's go ahead and go to Amazon. We'll keep going through these. We'll utilize all the big board stocks here. So again, I've already set the previous range high, previous range low. We see the price open, again, very similar, shows an immediate bias towards the low point, breaks down here, provides an entry around 567.20, ends up falling all the way down to 562.23. So depending on your profit target, you could have seen the move that you needed right there, ends up rallying, doesn't come all the way back to where your stop would have been set, ends up falling further. So it provides more opportunities for profit as the day goes on as well. So that's just another example. Let's go back to Apple, however, and let's test the last 5 days. This is not a perfect strategy. There is no perfect strategy out there. We try to look for strategies that have a 70 to 80% a win ratio. So if we go ahead, we'll utilize the two guidelines that we have set here. If you see these two white guidelines on the screen, we're going to focus on this far left day first. We'll set the one guideline at roughly the high of the day. It's not going to be perfect. We'll set the other guideline at roughly the low of the day. And then the next trading day, we saw the price gap down slightly, immediately show a bias towards the low of the day. It broke below that previous range low point, and then we saw it fall from the 110.65 all the way down to 109.75. So if you were trading options, you definitely would have had the move you needed to see. If you short the stock, you could have also seen a fairly significant move. Let's go ahead and do this day now. We move the guideline to the high point of the day. Move the guideline here to the low point. Okay, so now we're focusing on this day here. We see the price open, runs up, ends up breaking above. We get the move from 11.50. Goes all the way up to over 11.12, ends up coming down. So depending on your profit target, you could have seen profit. This may have been one if you were looking for a little higher percentage that you would have gotten stopped out on. Those of you who trade weekly options, though, you would have definitely been able to see a significant move. Let's go ahead and focus on this day. We have the guidelines, the high of the day, the low of the day. The next day, what we initially see is we end up not getting a breakout. In fact, it comes right down, uses that area as key support, that previous low, bounces right off of it. So let's go ahead now and readjust. Get the high of this day here. We have the low already set. This is really now a 2-day low, so it's even more significant. Go ahead and adjust this a little bit. We see the price open, immediately breaks right down below. But if we're being realistic here, this would have not been a situation, unless you were trading weekly options, this would have not been a situation where most traders of common stock would have been able to see a significant move. We saw this one fall from 110.50 to a low of 110.14. So not a fairly significant move, decent amount, but not what we've really been looking for. So this would have been a day here where we could have ended up having a losing trade on this specific trading style. If we go ahead and redo, we'll do again just as practice. The day we just did at the beginning for Apple, we saw the price move. We have the high of the day here. Adjust this, there we go. Go. Comes down, settles, immediately shows that upward bias, breaks, would have been a good entry in the 11.76 range, and sees a massive move towards the top side. Now again, this isn't a holy grail strategy. You've heard me say this before. There is no holy grail in trading. This is a very introductory method for beginner day traders to utilize. A simple strategy they can add along with the other one we went over, the opening range breakout that we link to in the upper right of this video. It'll still be up there if you want to go ahead and watch that video. But I want to get across that this isn't something that's going to work 100% of the time. So that's why it's important for one, to always have your stop loss set. 2, always have a clear profit target in mind. You need to go into these trades with a clear trading strategy. Okay, be aware of key resistance levels, key support levels. Obviously, if you struggle with support and resistance, you shouldn't even be trading at this point. You need to know support and resistance before you even begin trading. But again, this isn't a perfect strategy, but it's something that works a good amount of the time, 70 to 80% of the time. If you have any questions about the strategy, you can go ahead and post the questions down in the comments. You can always email me about any trading questions you may have, tannerstrading@gmail.com. I'd be more than willing to answer any questions that any of you may have. If you're interested in our trading course, we do have a swing trading course and a swing trading program. You can go ahead and visit mytradingschool.com. Look into what we offer. If you have any questions about anything relating to that, you can also email me at tannerstrading@gmail.com. I hope you enjoyed this video. I hope it helped you out a little bit, those of you who are new to trading, maybe even those of you who've traded for a while, give you a new strategy to utilize, and I hope you can find success utilizing this basic strategy. Thanks for watching. Please like, share, and subscribe, and have a great day.